Hey everybody, morning. Goose in the house. I see. Got Laura, Mad, Kathy, Dan, Cliff, Ronimer, Frank. Starting to get the hang of a few of these. Chris, I appreciate everybody being here. I did update the lower tier of channel membership with a link for Discord. Now, if you do that, you're not an otherwise JTT customer. You didn't get in from the one-click members area. If you join, you didn't buy a product. So it's a kind of a special exception. You need to link your Discord account to YouTube through that's a whole process. You can Google it, and it will automatically permission you for YouTube permission, YouTube channel membership permissions. A few people have done that already. So just throwing that out there. Added that feature last night. It got approved by YouTube, and so now that is a perk of being a channel member. You don't have to necessarily buy anything to stay in Discord and have access. You can just be a channel member. So there you go. Left my monster sitting over on the other side. There we go. I sat down. I almost knocked it off. And well, full moon this morning. That's kind of a oxymoron, right? I know what you're talking about. And welcome to the show, everybody. Welcome to the show. Thought I'd do a quick member update there. I do plan on having a member live stream for FOMC, even though it's been relatively boring the last couple ones. I will do it. And maybe short, maybe long. I don't know. We'll see. I guess it depends on what kind of fireworks come out of that next week on the 10th. And I don't know about this market, There's I just been doing short-term reliable trades, that beer money trade, as I call it. Some people call it, Ronimer calling it the Malort money trade. It's a Chicago liqueur, and Sledge joking about it being the Pappy money trade. Joking about it being more than just beer money. The whole point is small amount of money for a low duration risk. And when you start ramping it up, it just triggered a couple red flags in my mind. You need to be careful. All right. The trade can go south. You can lose the entire $5,000. We're making like $40 on average. And if you're sitting there going, well, I'm getting like $1 on average, you're playing too close to the money. You're being more dangerous. You're opening yourself up to more risk than you should. Please be careful. I speak to everybody that tries this out. Please be careful. Taking a big loss like that, a $5,000 loss just to make $40, can be pretty devastating and take a while to get back. Now, I stopped. The one day I did stop, before I had figured out the statistics of the trade, I stopped at roughly $13. I stopped myself out, closed it for a loss at roughly $13 a contract. And it took me about a month to recover. Now you do the math on that, and it takes about 30 trades if you don't change the size. I did push a little harder after I took the loss because I did some statistics on it and figured out where I should actually have been playing. So risking like $10, $12 loss, but you got to be able to take action. If you're doing something where you can't watch the screen, you can't watch the price, you can't watch the whatever while you're doing that trade, please be careful. All right. Black swan events do happen. They can happen. We've seen it in the statistics. Even in the last 5 years, we've gotten a couple outsized drops. They happen on occasion. Usually they're tied to events we already know about, like FOMC. But occasionally they're just completely out there. Trump tweet. That's the day I got hit. Trump posted on Truth Social that, tariff blah, blah, blah against China, ramp it up 100%. And that's the day that, I even went in after the Trump tweet and I still got hit. So that's the day I took a loss. I should have been more vigilant in hindsight. And this is one of those things. If you don't have the experience to know, please be careful. Trade small. All right. I just wanted to throw that out there. People have gotten a little excited about the trade, how consistent it is. Seems like it's just free money, and that's it does kind of seem like free money. Doesn't count as a day trade. All the risk is off at the close. And what's not to love? But if things go bad, it's going to be really bad. So I did have, for those paying attention, I did have $50,000 at risk yesterday. If the market had gone against me, that would have hurt, right? But I have quite a bit of money built up already in gains, not 50,000, probably closer to 10% of that. So I've almost made one contract's worth of risk playing it. So just be careful. Like, that's the whole, I'm perma-cautious, right? I don't like taking losses. I mean, that should be evident by my K-Info profit chart that just keeps going up. So I don't like taking losses. And I just want to throw that out there, though. You can lose the entire amount you risk on any trade if you don't pay attention to the risk. For years I've followed Wiz at Top Gun Options, and he was very prevalent in the Trade Monster platform and Option House platforms as they got started. And one of the things he always talked about was look at the risk number first. And if you're okay with that, risk number, then go on with the trade. If you're not okay with risking $5,000 on the beer money trade, don't freaking do it. All right? Just don't do it. Period. It's not worth it. There's plenty of other stuff to do. It is a 200% ROI, ROR, return on risk trade. But you got to be vigilant. You got to do it every day. If you're just going to do it a little here, a little there, be careful. All right? It's going to take if you're just doing a little here, a little there, it can take you a long time to make back a loss. And you got to be consistent. And there's no guarantee that the premium is going to stay. Like, it's here today, could be gone tomorrow. If the premium starts drying up and you got to be too close to the money, that's kind of what happened on S&P. Like, I was playing there first. I was even playing in the futures market with naked contracts because you can do that because the margin required is way less. But at the same time, the premium can evaporate. So you got to be careful. All right. Welcome back, everybody. My magnificent traders. Let's talk about how the early bird gets the worm. I had a dream last night. I dreamt that I could get paid from all those times I correctly predicted the season finale of a TV show. Ask Kimberly. I predict TV shows all the time. Maybe I predicted the winner of a political debate, or even the next celebrity to have a meltdown. And then I woke up and realized it's not a dream. It's another Tuesday in 2025, because now we're talking about Polymarket. And if you haven't heard of it, you're about to, because they just got approval to be in the U.S. markets in a big way. Polymarket is the story of how the weird wild west of crypto is slowly but surely being tamed, packaged, sold back to us, the very people who once called it a scam. And more importantly, it's a story about how you can potentially make a buck or two off this big, beautiful chaos of a betting market. So picture this. 2022, Polymarket, this plucky little crypto-based prediction market thing, gets the boot from the CFTC. Right, we got booted out of the U.S. markets. The CFTC, the Commodity Future Trading Commission, basically the hall monitor for the financial world of this sort of thing, slapped him with a fine and told him to get lost because they were letting people bet on, well, pretty much anything that people wanted to bet on in the United States. Unregistered derivatives contracts, they called it. I mean, sounds kind of scary, like something out of a sci-fi movie, but in reality, it was just people with a strong opinion and a little bit of crypto on the line to back it up. So Polymarket goes into exile. A pariah goes and tries to find its market in the rest of the world. 4 long years, they wandered in the digital desert of the abyss. And then something funny happened. The world, it changed. The suits on Wall Street, the guys who used to clutch their pearls at the mere mention of Bitcoin, started to get a little bit more accepting, right? A little more curious about this crypto stuff. And then a move that can only be described in a plot twist from a Hollywood-style movie. Polymarket didn't just make a comeback in the US. They came back with the blessing of the CFTC and a cool $2 billion investment from none other than the ICE, Intercontinental Exchange. Not the other ICE. This is the ICE that traders like. And yes, you heard that right. The owner of the New York Stock Exchange, ICE, the beating heart of traditional finance, the place where your grandpa's retirement fund probably lives. They just dropped a cool $2 billion on a crypto prediction market. Think about that a minute. It's kind of like finding out your straight-laced, always follows the rules accountant has a secret life as a professional poker player. And he's winning big time. So what does this all mean for you, the savvy trader with a healthy knowledge of how things work and hopefully a healthy dose of skepticism about the markets? Well, there's opportunity, as always. And I'm not just talking about betting on whether your favorite sports team is going to win the championship. I'm talking about real, honest-to-goodness investment type plays. Let's break it down. First off, you've got the direct play. Polymarket itself. Now, it is a private company, so you can't just go out and buy shares on Robinhood, but you can bet your bottom dollar with a backer like ICE, an IPO is probably coming. So keep your eyes peeled. It's that potential high risk, high reward type stuff. The kind of thing that could either make you a boatload of money or leave you wishing you never touched it. Second, you've got the smart money play, and that's investing in ICE. And we're not talking about the ICE that makes the news. We're talking about ICE, the company that owns the New York Stock Exchange. Their stock symbol is ICE, ICE, India, Charlie, Echo. It's boring. It's stable. I'm a responsible adult playing this kind of play. You're not betting on a plucky startup. You're betting on the financial giant that put $2 billion out there in investment into this whole betting market thing. They're making it pretty clear where they think the future is headed. And you've got the picks and shovels type of play. Maybe my personal favorite, because during a gold rush, the people who get rich aren't the ones that dig for gold or bet on the mines. It's the people who sell the equipment, right? In this case, the equipment is the underlying technology that makes all this possible. Talking about the stable coins that Polymark uses. The entire ecosystem runs on them, and a company that issues the biggest stable coins, USDC, is a publicly traded company called Circle. Their ticker, CRCL. I have a stake in CRCL. I have shares. So, since their launch in June, their stock has gone up over 5% and then come down all that back to zero, back to scratch. Let that sink in though. 500% rally. I mean, then you've got the crypto exchanges themselves, like Coinbase, the places where people go and buy this digital gold. And as prediction markets like Polymarket become more and more active, more and more people are going to need more and more coins to go take and play on these markets. And also, you could bet on Polygon, but that crypto looks pretty bad. It's kind of the heart of Polymarket. So there you have it. The story of Polymarket, the story of redemption, strange bedfellows, and the relentless and inevitable march of money into crazier and crazier things. So the smart money might be late, but at least they brought a lot of cash to this party. $2 billion is nothing to sneeze at, really. And of course, not financial advice. They did launch an app this week, brand new for the U.S. markets. You may not have it on your app store yet, but it's coming. And of course, this is not financial advice. I'm just a guy on an internet with a camera and a healthy dose of sarcasm, so do your own research before you buy anything. There's very likely to be drama, intrigue, potential winners and losers, and all sorts of stuff as this keeps going. You could do a lot worse than Polymarket, but be careful. Be careful. I've used it quite often to kind of get a feel for what the market participants kind of feel like is going to happen. That and Kalshi. So be careful out there, everybody. And remember, all trading involves a substantial risk of loss. Past performance is not necessarily indicative of future results. This presentation is intended to be informational, educational, fun, entertaining. Hopefully you're entertained. If you desire personal financial advice, hire and consult a financial advisor, which is not me. I don't pretend to be one. I don't have any certifications to be one. Just a dude that makes some money and shows you how to do it. Shows you what I do. And so we've got today, which is kind of benign. We've got this week, which has also been kind of benign. Friday, we normally would get the jobs report, but it's notably absent. Right? We would usually get the November jobs report. Now, the crazy thing is, it's not going to come out until after the FOMC meeting next week. That's crazy to me. That's the one thing the Fed was all getting all nervous about was the jobs, and we're not going to even get that until after this FOMC meeting coming up on the 10th. This might be interesting. This might be interesting, everybody. I can't say for sure. We look at the DGS2. I've been trying to, read the tea leaves, put this all together. Like, what's about to happen? There's not much room to do a cut. The market's been pretty stable. The job owning over here was pushing interest rates down. DGS2 is the real market rate. If you thought the Fed set the rate, welcome to the party. They just kind of chased the actual Treasury rate right here. Here's the Treasury rate. They job owned it down over here. Did a couple cuts, but now we don't really have room. The job owning kind of stopped. We've not really been able to go anywhere. That's not much room right there. There's not like another cut's worth of room and safety in here for the Fed. They got really nervous right back here. This is why they held. They held right there because when they cut that last time, the Treasury rate spiked above where they cut. This is the truth. All right. They can say whatever they want to publicly, but this was the truth. When they made that cut, they got scared. That scared them bad enough to hold the rates until they had room to cut. Why wouldn't they do a bigger cut? Because they didn't have room. They wanted to make sure everything was going to be okay. We're not going to get any kind of freak out in the Treasury. It's 2-year constant maturity rate. Right now, the reason Powell's been really I'm not sure we can do another cut because they don't have any room. If they cut and then this spikes above, they're going to have to raise rates. This is the truth. The way this works. They're always chasing the real market rate. The real market rate, right there, 3.5. They don't really have any room to cut another quarter point without being in real danger that the market rate crosses above. This is also why they're interested in starting to buy treasuries. instead of, let the MBS, the mortgage-backed securities, roll off, and they're going to buy treasuries to help push this rate down so that they can cut more. It's kind of a weird Ponzi scheme of financial easing. They're going to try to push the rate down that they chase. Good idea, bad idea? Why don't people actually say what the real reality of the situation? It's a script of megalomaniacs. I mean, you get into politics if your face is no longer too pretty for Hollywood. So be careful out there. They can say the Fed's not political all they want, but absolutely 100% is political. They're going to try to push this down, buying treasuries, but they have no room for a cut. So what if we don't cut? The market's counting on a cut. What if we don't cut? Could bring a little bit of pullback. When we look at the, go back, jump over this chart. Cool. I've been talking about the fact we're kind of up here, hypoxic a little bit. If we keep rallying, if we rally on into that meeting on the 10th, probably going to get a pullback. If we can pull back, if we can do a pullback into this meeting on the 10th, probably rally. If we rally into the meeting on the 10th, probably pull back. If we go sideways in this area, it's a coin flip, baby. Who knows? I don't have a good guess. Maybe, it could just do nothing. So that's the crux of the matter. Where that's the reality of the situation, the crux of the matter. Look at it in Q. We're still bearish. We still got lower highs, still on a downtrend until we can get above this level up here. I kind of would love to see a pullback into FOMC next Wednesday. Right now we're sitting on Thursday. We got Friday. We got Monday, Tuesday, part of Wednesday. So we've only got like 5.5 trading days left to get this thing sorted out. If we hang out up here, it invites the pullback reaction. So just be on your toes. Be on your toes. Russell kind of, pretty much doing everything it can to confirm that we're probably going to see some sort of reaction like this, but that doesn't preclude a pullback before we do that. So we could see a pullback. We're kind of confirming that the path is higher, but that's the overall path. How, the actual route we take to get there could be fraught with chaos and volatility. Got oil. Why do I look at these? You may not be familiar with these. This is the ES, it's S&P 500 futures, the NQ, it's NASDAQ futures. RTY is the Russell 2000 futures. The, SPX doesn't trade after hours. The futures fill in all the price action. So where you look at this and you have some gaps, gap up, gap down, you're like, what the fudge? We closed here and we ended up here. ES fills in that data. So I look at the futures, just kind of fill it in. CL is oil, in case you didn't know. We still have very bearish, look at that downtrend of zoomer up, buttercup. Grab this is pretty bearish right here. I have to say, look at this. It's we didn't do that head and shoulders. I'm pretty much going to void that off at this point. That's probably not working. That head and shoulder is probably not happening here. This is a bearish grind back into the lows. Look at these 3 lows right here. Setting us up for a dip. Violent dip. FOMC? Maybe. I think we're going to get a flush out. It's going to come down here into the low 50s. maybe even high 40s, possibly the mid 40s if it gets bad enough. And then, anybody remember what happened right over here? Saw some missiles flying from Iran and the US, and it's caused oil to spike and the prices to come back up here in the 70s, and everybody was happy again in the Middle East. But we're bleeding it back down. If we get a drop like this, missiles are probably going to fly again, because nothing spikes the price of oil faster than shooting guns at each other in the Middle East. Gold just kind of hanging on here. I was apprehensive about the gold rush trade for the week. Still kind of am. We can spike that though. 43.70. That would be kind of the ideal spot right below the all-time high, and still take this back down. So that smaller time frame trade can still work out just fine. It can even, doesn't have to fail, but just be careful. The one reason that I didn't just absolutely not take it, that looks like 1, 2, 3, 4, and we can see a little 5. And that would fit with an A, B, C of the A, B, and that C is down here off the screen. Right here. That's the correction I think we're in. You may see this pullback, something like this, out here into the new year, possibly. Be careful. Gold's one of the biggest gainers of the year, and profit taking into the end of the year would not surprise me one bit. Silver, that's a warning sign right there. The way this popped up and then stalled out. Definitely see this kind of retrace right here. We haven't gotten past a 3 standard deviation from the roadmap line like we did on gold. So this one could still run. It's entirely possible. We still have energy to run on silver. But on gold, 7 days we spent outside. We're probably, when we spent just 3 days back here, we spent 3 days. That resulted in 5 months of sideways consolidation back here. 7 days out, we could be consolidating for close to a year. So gold may be less interesting for a little while. It may just kind of churn in here in a range for a year while we recover the energy we spent getting 3 standard deviations away from the mean here. This little bit right here took a lot of energy out of the gold market. Bitcoin, let's turn off the deviation lines. So far, so good. Came up just shy of that 94.7 on the all-time history here. Still needs some continuation, but this may have been all she had in that first move. We may get a 618 retrace yet again. That would look something like, here's your low, here's your high, come back down. It seems like we're just churning in place, but it'd actually be a 1, 2, 1, 2, and we could set us up for a bigger pop. But if we pull back here, we need to hold above that prior low. If we get below that prior low, just from Monday or Tuesday or whatever it was, Monday I think it was, and Monday, this is going really fast. If we get below that Monday low, probably kicking off crypto winter, because this did all we needed to see for an A, B, C. That was the only requirement right there. Higher high. If we break down back below here, probably confirming 10 months of crypto winter consolidation. That would be trend, ABC pullback, continuation. I'm still bullish, optimistic that we're going higher, but this is a warning sign right here. And if we get below here, this level, it's a double warning. This is kind of like the final warning, and then breaking lower low. Crypto winter is probably like, it's like, we're probably like 90% confirmed in the crypto winter. We'll probably do some sort of big rally in crypto winter after we get this initial move down. If we're in crypto winter and we get this confirmation here, we'll probably make some bottom, maybe in the 60 or 70,000 area. Then we'll probably do a couple month rally back up in here, maybe 80, 90,000, maybe back up in this area where we are right now. Maybe up to a 618, wherever that happens to be. Could get close to 100,000, and then we'll probably take the big spill down to that 30 to 40K. Sometime late summer, early fall. That's probably what we're gonna do if we're in crypto winter. Hopefully that fits with everybody. You know, I offer updates in crypto power plays on how we're all unfolding. Look at the 4 hour here on Ethereum. This looks a little more optimistic. We actually hit the 1272, but that's still a coin flip between bullish or bearish. Like that zone I put in here, we just hit the top of it. We didn't hit, if we had hit the 1618, that tips the odds that we're going on higher after a consolidation that holds above there. But at this point, if we start overlapping that high, then we have to look for a 618 to hold and bounce. And that would be a 1, 2, 1, 2 type setup right there. Looking for the 3 of the 3. But if we break down below this low, same crypto winter confirmation. So still an important juncture. Nothing changed in crypto. NKD still sitting in here. It's a good sign though. Came up to that 618. If we can step across it, probably going on up 53, 54, 55,000. And that's a global liquidity indicator that there's more global liquidity and we can take prices higher again. Dollar. I saw so many gurus yesterday posting how the dollar dropping was bullish for the market, blah, 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 blah. So why did the market do jack diddly yesterday? We get below 98.5 right here, probably going down to a new low on the dollar. Right? So look, the dollar's been, this is a rally in the dollar from September up through mid-November. If the dollar rallying is bad for the stock market, this is what, why from here through mid-November did we also climb? The dollar has nothing to do with the stock market going higher or lower. Correlated when they're correlated, not when they're not. It's just a convenient excuse, I feel like. It gives people something to talk about. But 292 potential upside on Apple, Amazon. Turn down off that resistance. probably going to get a move down in here. And if it doesn't hold that zone, going on lower, we could make a lower low than we made back here in April pretty easily. Even though lots of financial pundits don't think that's possible. So Amazon and Tesla are the two Mag 7s that just aren't really performing. Although Tesla pushed above, or is pushing above, that 450 resistance. Yesterday I saw a sweep order up here. Somebody spent $12 million on a block of calls. 550 for January. One order, $12 million of calls at 550. And you can say somebody knows something, or maybe they just got $12 million to blow. This can definitely come on up higher. Netflix, there she is. Come on down. A little bit lower. Poke right in the zone. I was wanting to see this right down, right in there at 100. That's what I've been talking about for weeks and weeks and weeks and weeks and weeks. Almost there. Gainers and decliners. I go pull pre-market, things that are moving. Things that are moving $2 more up, put them on the gainers list. Things that are moving $2 more down, put it on the decliners list. Let's kind of look for a couple opportunities here. I have 54 tickers that are set up with my signature bounce pattern off the roadmap line. If you don't have the roadmap line, go to the channel homepage, watch the video, tell us like how it works. I haven't updated that video in a long time, but basically the same code, same everything. I give you the code in that video. If you're like, I don't want a code, I just want an easy button, put it on my chart. Links in the description, $5. Get you on the chart. They also get you in Discord. Or you can be a channel member and get in Discord. So HY. This is interesting right here. So there was a senator. I think it was a senator. Either a senator or House Representative member bought a crap load of this. Right here. It was the smallest market cap stock that any politician in Congress has traded. And it was, I mean, look at that. Basically had a $500 million market cap before this move up. Hitting the roadmap line. It's not exactly bullish, but they make forklifts, and the U.S. government buys those forklifts. Maybe they know there's some sort of contract getting ready to happen, and this thing might pop. I don't know, but you should be careful if you trade it. Race. Ferrari. Getting ready to retest the breakdown. And if we complete the head and shoulders here, it could just break on down. Still bearish, even though we're popping a little bit today. Toyota Motors has not been able to do anything bullish. This is actually a bearish top out right here. And the trend was down. 1, 2, 3 wave correction. Continuation is lower. Careful. Dollar General. Yeah, there you go. Representative Tim Moore. Dun, dun, dun. I can't remember all the details. I don't have like show notes. This is just all up here. 5 below. 5 below has this potential to go on up here. Like target's up here, 400. So that was a 3-wave retrace, higher low. It can go up here. It may pull back before we do that. Could take quite a while to do that. So SMX, I wouldn't touch that. GSGX. Not sure that correction is finished. It's a downtrend. Downtrend highs until we can break through. That's probably still going lower. SAIC probably popping on the fact that the Department of Energy announced that they need 300,000 engineers to build all the nuclear plants that they need, we need, whatever needs 300,000. This is Science Applications International. That very well could be popping on the fact that the government needs about 300,000 more engineers to make all this nuclear stuff work for the AI race. And it's kind of an arms race with China at this point. Think of the Cold War. This is probably the AI war that we're getting ready to do with China. So he who has the most power, and power is going to be the limiting factor. And China's already got the one up on us, so we're going to have to get our collective crap together. I saw something yesterday about conscripting diesel generators installed at hospitals, data centers, malls, because they found that there was 35 gigawatts of capacity in diesel generators just sitting there. And they were thinking about conscripting those to, to help cover the gap until we can get more power plants online. I was like, that's a freaking crazy idea. CRM, still the downtrend, still looking for this dip right down in here. Steel. Snow. Yeah, I thought snow would come on down to the roadmap line. I actually need to set an alert there. I may pick up something else. I'm up like 100% on my position I bought back at 100. So ASML, there we go. If we can get on up here, we confirm the bullishness. See a pullback, retest the breakout, and then probably go much higher. Costco, come on down. Looking for this to hit 862, maybe even 840. Been on this pullback for a while. Back since the summer. We're almost done, potentially. Snow. 2x leverage on snow. This might be what I buy. I might buy one of these 2x leverage if snow can finish that pullback. CHKP and MU. So yesterday, Micron announced that they are no longer going to sell to retail. They think they have all they need to sell to commercial clients. That could result in a down push as they exit a key market. They're like one of three major, that's a third of the consumer market, really. One of three players is going to exit the market, result in a downside move. Going to exit the RAM market. So RAM probably going to get more expensive and more rare for, I don't know. We'll see what happens. CRDO. And be careful. We've already hit the upside here. SanDisk probably coming back down to the roadmap line. JNUG probably coming back to the roadmap line. Lennar. We're at that 618 resistance. While it did trigger potential come up here, but we're still in a bearish trend, so going back for a lower low, very possible here. STX needs to come back to the roadmap line. Coinbase potentially made the bottom. Resistance here, resistance here. MSTR, same story. Potentially made the bottom with that dip. Touched the top of my bubble. Did it a lot faster than I thought. Let's see if we can bounce. Got to get above here. Got to get above here. Got to get above here to confirm we're going higher. So this is the big tool. This is the big resistance. So we'll have to clear in order to go back to an all-time high on strategy. Dun, 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 dun. And quick question, yesterday's NQX trade. Not sure what NQX is. I'm not sure what NQX is. Please, I don't think I traded any NQX. A NASDAQ reduced value. I wouldn't. I didn't trade NQX. Talking about NDX, it is a spread trade, and I talked about it in the opening today. So it's not naked. It's a spread. I've talked about it quite a bit. You can go back to. It's been recorded several days now. That right there, potential go down. I don't support that trade. It's just a trade I throw out there. So it's not an alert service. It's not a. There's no training. There's no nothing. If you do it, it's on your own. My Termar Trading Lab group, that's who has the most information about it. PHV or PVH. Strike that, reverse it. Probably coming back. Break below. Watch out below. A Lab. Still in a downtrend. Rejected the breakouts. Good. No bueno. Probably coming back to the roadmap line eventually. Remax. Banner. Yeah. So it looks like rare earths are going to go through a little bit of problem here. Thorium. If we can get just a little bit higher, that confirms the breakout and the bigger push for 3M. Let's look at this is a monthly chart setup here. Talking about 250 on the upside for 3M. Car. That's a downtrend. Just don't see it working out right now. We're in a potential for bottom zone, but this can come on down to 40. And Kroger not. And rejected that bounce, going lower. How low can she go? Probably on down in the 50s. All right, stuff that was set up for an entry today. Roadmap bounce style. Let's turn on the algorithm here. See the statistics down here. Remember, less than 30 doesn't mean anything. Only a couple people commented yesterday if they would find a video helpful. Guess I can do a poll. There you go. About 90 people on the stream right now, so see how many people participate. That right there is the entry, 13 target, low price stuff under 20. Not my favorite because the big boys don't really play under 20. ASO. Yeah, so here's the high, here's the low. This is took that trade, stopped out back here. Entry here, target 57, no statistics. AUB. Here's the high, here's the low, high, low. Entry 37.70. Reasonable, not great. BAP, BAP. High, low, entry, taking a rip, 287. BEN. And this one's misguided. Needs a little bit higher. BFC. Man. 137. I don't know. Statistics just kind of average. BHP is the wrong BHP. We need the New York Stock Exchange version. This has been sideways for a long time, but that doesn't preclude this working out. 59.82 targets. It's not bad. 35.88. I mean, that's actually all the things I look for right there. So despite it being in a, and this doesn't take a breakout of the consolidation either. So that's high probability, almost 90% likely to work with a 1.9. That's all the things I look for right there. It's as good as McDonald's. Box. Yeah, I know what it. So the Python code found this high, this low, this entry, and target probably right there. I wouldn't touch that. And we had this trigger before on Python. Now here's the actual trading view algorithm, hitting it to 2365 targets. 85, 4.8, but only 7 trades, so you can flip a coin 7 times. KMT. Here's the high, here's the low, there's the entry, 136.15 targets. Cash money. Yeah, I know what it found. Grab that high, that low, there's the entry. We'd be very careful on this. And grab this right here. And target 79. That can work, but it's a downtrend of highs, so got to get through the highs to even get to 79. Doesn't give me that warm fuzzy feeling. I wouldn't do it. CCK 51.84.2. That's a pretty sweet one right there. Here's the high. Here's the low. Entry 104. CDNS. Here's the high. Here's the low. Not quite there. It grabbed this high, this lower high on the Python code. Python code is more aggressive. I want it to find stuff so I don't miss it. There's the entry, 26 target. No statistics. No history of working. That one's a downtrend. CMCO. Here's the high. Here's the low. Not really confirming an uptrend, but it could be a reversal here. Like this was the low. First move up. We can get the continuation. Doesn't even take much upside. 1968 on that one. Fair statistics, not great. Negative profit factor. That one, again, downtrend. CORT. Choppy sideways action. But that doesn't mean it won't work. 95, and it can still be in the choppy sideways action. CRAI. That one worked out last time. Here's the high. Here's the low. Why do we get the target we get? Because we a lot of times get pullbacks. Like that's been. So when we take that one, 221 would be the targets. 21.84. Right, that's 9 trades is not going to wreck this win rate probably very much. So that's probably a pretty good bet right there. CRL. Here's the high. Here's the low. There's the entry. 204 target. CRNC. Here's the high. Here's the low. There were a lot of these today. 54. 15 target. CSX. Here's the high. Here's the low. There's the entry. 37. I like that one too. Not bad. Decom. Here's the high. Here's the low. 32.92. Negative profit factor. Dick's Sporting Goods. I'm bearish on this, but doesn't mean it won't work. 243 targets. It's got good numbers. EMR. Worked last time. Pretty good. Did another bounce. 143 targets. Look at those numbers. 58, 82, 1.2. Pretty solid on EMR. Here's the high. Here's the low. Entry 6. That's under $10. Be careful. Under $20. Be careful. Here's the high. Here's the low. Did not fire off yet on that. I know what it did, but Python code is aggressive, so it tries to find the smallest little bounce that it possibly can that fits the criteria. And then my filtering for TradingView, and when I actually look at the charts, I filter out some of the conditions. This one fired off back here in November, did a deeper bounce, didn't stop it out. So we're still gunning for 78 on the upside. 4. Here's the high, here's the low. Entry 30.57. No history there. If you're liking these, give me some feedback. Seems that we're dropping off attendance on the stream. It grabbed this small bounce, not the bigger bounce. I'd be careful on that one. IMCG. People ask me for these all the time. Here they are. Jackson. Here's the high. Here's the low. 107. Mac. I took a trade on microchip yesterday. Yeah, that one's already in it from back here in October. Look for that 19 upside. Microchip, I took this trade yesterday. It's probably going on up. The algorithm actually grabbed this right there. That entry, target 73. MTUS. Entry 18. NFBK. Entry, target 12. PLBC. Entry 47.59. All right, Rebecca. Rebecca. Yeah, I wouldn't like it. So Python grabbed this little high right there because this went below the roadmap line. I'd look at this high and this low though, and it's not firing off yet. Rush B. Entry 62 target, cite him. And here's the high, here's the low. Entry 408. 3, and not great statistics. Slab. That's a downtrend all day long. I would be very cautious here. Not keen on that one. Slab. It just doesn't look good. SNA. 362 upside. That pretty good. 50 trades, 80%, 1.7. It's good numbers. That's repeatable. You can see it did it once, twice. This will be the third time this year. SNA pretty good. Pretty snap on right there. Pretty reliable. SPR. Kicking it off, 43.50. SSNC. The Cashbot trade fired off. 92.90 target. TDiv. High low entry 105. TFII. And don't like the downtrend on this, but doesn't mean it won't work. 100 targets. T-row. High low. And so the Python algorithm grabbed that high because this low went below the roadmap line right there. So I grabbed this high, this low, and looking for that right there. But this up here, I would use that from up here to down here, and that 618's up here. But it might fail if you do that, so be careful. VFH kicked off from back here in November, went a little lower, didn't stop it out. Stop's always $1 below the low, and 135. VPG. Remove the drawing. Here's the high, here's the low. Entry 40 targets. Wall. These are on your own, by the way. Like, I'm going through these, but if you take them, set your alerts. 96.76. Own your own trade. I'm just showing you stuff that, you know, here's all the potential possible trades you could get involved in on the daily chart with this system. This works on all time frames. So you could use this on the 4 hour, the 1 hour, the 30 minute, the 15 minute, the 5 minute, even the 1 minute. And there's a 1 minute firing off on IWM right behind me. So 1249. All time frames that last 45 candles on average. Standard deviation is 35 candles. That means to cover 3 standard deviation and not run out of time, you need 150 candles. On a 1 minute time frame, that's like 3 hours, roughly, for 99%. For a daily chart, that's like 7 months. So this daily chart right here, 7 months. Is how long these could take to play out 99% of the time. And then when you have thousands of them, you know, you have 1,000 of them fire off, 1%, that's like 10. Could last longer than 7 months. $90. Z. Now, the algorithm grabbed this little move here. I would be looking for the bigger move right here. I was going to get involved in that bigger 618 for that bigger move. That's me. My preference. Zion's Bank. Entry and target up here at 61. There you go. That's the list. Made it through. Expectation for the day is extreme caution. I think we may experience a pullback into FOMC. That could be a couple hundred points down. So watch out for this little uptrend. We get below it. Opens the door for the bigger retrace back down to here. 6,600. So that's 250 points down. If we can push it on up, great. If not, alrighty. Have a great day, everybody. I'll be back on Market Masters at 11:30. I'll be back tomorrow, same bat time, same bat channel right here, looking for opportunity. Have a great day. We'll see you tomorrow.